Hey everybody, how's it going? Welcome back to the Rideshare Hub. My name is Dylan. Thank you so much for coming by. So I really appreciate you clicking on my face and watching this video. This is the Rideshare Hub and all about rideshare, Uber, and Lyft and teaching drivers how to make more money. When I first started driving, I had no idea what I was getting myself into, and I actually almost fell into this trap, which I'm about to talk about today, which is talking about why so many drivers are quitting. And I made a video about that, asking the question, and I asked you guys, what do you guys think? Why do you think that so many drivers quit? I got so many responses. I wanted to make this follow-up video because I did a lot of research. I always do tons of research before all my videos. I don't know if you know that, but I read articles every single day, talk to drivers, talk to passengers, talk to accountants. I talk to a lot of people and do my research. And the number one reason why drivers are quitting Uber is for cash flow problems. If you didn't know, there are a lot of expenses driving Uber, or if you're thinking about driving Uber and Lyft. I'm just gonna say Uber, but for both Uber and Lyft, you are using your own car, and that's one of your assets. So you need to take into account, you have three main expenses driving for rideshare, right? Depreciation on your car, which is real because you own the car, and if your car is going down in value, you're losing money on an asset, right? Okay. The second one is maintenance on your car. Wear and tear. You need to do oil changes, replace your tires when your tires bald. When I first started driving, that was the first thing I had to do. Well, I got an oil change and a tune-up, but my tire, all of a sudden I saw my tire was like almost bald, and so I was like, shoot, I can't drive passengers around like this. I had to spend $200 on a new tire. Maybe it was $125, whatever it was. I had to buy a new tire. This stuff adds up. And then the third cost is obviously gas. Unless you drive an electric vehicle, then you're paying for electricity. And if you do not calculate these expenses, the reason most people quit is because all of a sudden they have a realization that they're spending more money than they're actually making. And yes, there is a way to actually lose money driving. A trap that a lot of people fall into is that they're basically taking a loan out on their car in order to pay for stuffs through depreciation and future expenses and wear and tear and maintenance costs. Let's say, for example, you're driving a $30,000 car. You buy a brand, let's just say for this purpose, you buy a brand new $30,000 car. You're driving it for Uber. You're gonna, all of a sudden you quit your job, you're driving full time, and that car that has 100 miles on it, brand new, after the first year, you just put on 50,000 miles in the car. That's pretty normal for driving full time, right? And during that year, let's say you made $50,000, right? Driving for Uber, which is, sure, that's normal. But on your car, that $30,000 car that you just bought, is now only worth $20,000. And so you pretty much just lost $10,000. Yes, that $10,000 depreciation can be a tax write-off. Okay, this is getting really complicated, but you see where I'm getting with. Even the tax write-off, that's a tax write-off, it's a tax deduction, not a tax credit. There's a difference between that. Look that up if you don't know the difference. I'm not a certified public accountant, so, dude, this is not legal advice, but for me, I guess, for my own opinion, or my own experience, when I depreciate my car, I'm not getting that money back. It's just money that I don't get taxed on, so that's $10,000 less. So really, out of that $50,000 that I made, I get taxed on $40,000 of it, which, whatever, you get the deal. So this is why it's super important to write all your expenses down. Create an Excel sheet, get nerdy with it. At least make a notes tab in your phone, or write a notebook, get old school. Track all your miles, track all your expenses, calculate it out. How much are you making? Calculate a week. Do this, okay? If you don't want to do it for the whole year, whatever, at least do it by week. See how much you make per week, then go through your bank statement, or if you use cash, then go through your cash, whatever, and write down every single expense you made and deduct that from how much you're making. And yes, you can do the tax deductions too. It's 58 cents that you will get deducted per mile that you drive. So from my experience, this is the biggest reason why drivers quit, is that all of a sudden after a couple of months, they all of a sudden have a realization, shoot, I don't know, whatever, they need a new starter in their car, and they're like, shoot, I just put on 20,000 miles on my car. I know when I first started driving, I bought my car at like 100K, and all of a sudden I looked down and it was like at 111 or something. I was like, shoot, I've already driven like 11,000 miles in this car. Like, it really does add up. And so that's why I always recommend buy a cheap car. This is why this car I bought for $5,000. Didn't cost $30,000. So that's why this helped me. Yeah, I mean, there's just so many things to get into, but I don't want to make this video too long. I just wanted to basically put that out there, and that's why I think is the #1 reason why drivers quit. Let me know your thoughts, opinions. I will talk to y'all soon. Make sure to like, comment, subscribe, and sign up for Uber and Lyft with my bonus code or link in the description below if you want to get a $1,000 sign up bonus for Lyft or for Uber. All right, thank you guys for watching. Have a great day. Bye.